What is up, everyone? Can you hear me? Let's go. Let's go. Let's go. Let me know if you can hear me. The chat we're using is the Discord, the free Discord room in the Wolfpack. Same as yesterday. If you're not in the Discord, there should be. Is there? Do we have a sign? Do we have a link, like a button for them? The people who signed up on the site for free. Okay, if you go to your account page, your free account page that you signed up for, there should be a link to the free Discord. You just got to link to it. And then in the free chat, that's what we're going to be using all day. We're all going to be there all day long. There's an echo. I think it's just for you then, maybe. Anyone else have an echo? Okay. You might just have something weird going on, buddy. Okay. Sorry, 1 second, everyone. Be getting going here in a second. All right. No, there's not much on the scanner at all this morning. No, UNCY has been running for a couple days. So this is just a multi-day runner at this point. And a little multi-day breakout too. Are you still long, Tanner? It's just a multi-day breakout, man. So there's no, it just is what it is. I wouldn't say chat pump or anything specific. Yeah, I'm not going to today, but we'll talk about it. We're gonna get into the tickers in a second. Gotcha. Okay. 1 minute. We're going to get right into pre-market prep here. Earlier day, but okay. All right, guys, I just ordered us a box of coffee from Dunkin'.
So privileged is so generous.
Okay. All right. Everyone at home, thanks for joining. Got my little crew here. We're going to be live trading all day. Well, not all day. We'll be doing mostly lessons once we get through the morning live trading. So we'll probably live trade for about an hour, hour and a half or so. And then we're going to get into today. We'll talk about process. I talk about it every boot camp because it's important. Just kind of going through my trading process from A to Z real fast. We'll talk like entries and exits and risk reward and psychology. That's what today's going to be. We'll talk setups a little bit, but again, going back to yesterday, it's not just about the setups. In fact, the setups are kind of a small part of what make me successful. The setups come and go. You know what I mean? It's the rest of the stuff. The intangible stuff, in my opinion, the grasp on trading psychology and market psychology that can really help set you apart. And that's always my goal with the boot camps, is to help change perspective as quickly as I can for some of you. For some of you, you know, maybe it doesn't resonate, that's fine. But for others, and I know it works, you know, a lot of people after, you know, going through boot camps or spending some time with me are able to have a very swift change in perspective, which as you guys know, if you've been trading for a while, it's tough. And we hit walls. Like we can hit like myself included, we'll hit walls where we're just like not progressing. And sometimes it takes one just hearing something to set you on a different path. So that's always my goal during these things. Hopefully we accomplish that today as well. Sorry, just this corner. All right, so we don't have too much time. Pre-market process, we got about 15 minutes today. The scanners, not a lot of tickers, not a lot of stuff that's interesting, not a lot of gappers at the moment. Okay. Top percent gainers, MTEM, MTEM. Not a tiny float, not a low float even. Get to other tools we need here. Toss this up really quickly while we go through pre-market process. All right, daily chart on MTEM, it's a bottom bouncer, you know, a really beaten down ticker. It's trading at 40 cents yesterday, down to the 30s last couple weeks ago. So just a bottom bouncer here. I don't see, yes, they did. They PR'd yesterday, IND acceptance, midday PR it looks like. So they did at least have news, okay, on MTEM. I can tell you, just looking at the scan right now, it's slower. We have no big gappers this morning, okay? No big gappers. So I'm not 100, you know, conviction-wise, just looking at my scan, first thing in this morning, not high. I don't even have to look at any of the tickers. You know, I do see, yeah, UNCY looks like they PR'd. But that's pretty much it. Bird Global, BRDS. Let me get MTEM in here. MTEM, extremely dilutive, it looks like. They can dilute 212 million shares with an ATM at the moment. I don't know if it's capped by baby shelf. Not. So they've got a fat ATM that they can use, but also decent news. So top percent gainer for now, MTEM. Barnes & Noble Education, BNED, earnings yesterday, after hours on BNED, bottom bouncer as well. Oh, I'm sorry, never mind. $2 stock now. Somewhat bigger float, 28 mil or so. Another beaten down ticker, just like everything else. May watch it for a single, I suppose. Again, nothing jumping out on my screen, trading a ton of volume and gapping big, you know, at the moment. BNED non-dilutive. Okay. APPH. Big gap downs recently for some reason, going back to February. So we got to kind of keep an eye on that, see what's going on there. App Harvest. App Harvest, earnings as well. Big ass float, so I'm probably just going to ignore it. Generally speaking, if there are big floats, I ignore them. Generally speaking, why? They're not going to be that volatile most of the time. That's what it was. Ooh, 40 mil at a buck. Okay. Yeah, you can see here. So they did an offering. That's what the gap down's for. Anytime I'm looking at daily charts, and that's the first stop after I get to filing, or I'm sorry, after I go to the scan, the first thing I do is go to the daily chart. Anytime there are gap downs, I want to see what happened there. 9 times out of 10, it's an offering. But if it's not an offering, it's always bad news. So it's good to know. They gap down due to the offering. They have at a buck. There's probably warrants and stuff there. 40 million shares at a buck, and a 30-day to purchase up to 6 million additional shares. Okay. So that's App Harvest. We know that they're dilutive, right? Doesn't mean I'm not going to trade it 100%. Today it's probably not going to happen, but big ATM warrants, 750 ATM, plus a big float, you know, big float there too. BRDS, another bottom bouncer. That's all we're seeing on the scan this morning. 20-cent stocks, you know, 50-cent stocks. We got a couple other things here, but just not very much, you know. And I my dollar volume requirement's like nothing. This is just anything that's up 5% on any volume, you know. You buy like, you know, a vehicle with that kind of dollar volume. Not a lot. Okay. If you put it in those terms, you know what I mean? How much $50,000 volume is, it's very small. But I do that in the morning during pre-market so I don't miss anything. I want to see everything first. I'm not going to trade very illiquid stuff, but let's see what's going on with SI. Silvergate Bank statement on Silvergate. Senate issues statement on Silvergate liquidation. BK bounce? Are they BK? Shipping Titan Silvergate closing shop. I remember seeing this. Am I ignoring UNCY? I mean, it's actually one of the only plays out there this morning, to be honest, that I see on my scan. It's a multi-day breakout. I don't like breakouts. So yes, I am personally ignoring it. It's the only one that would have my interest at all. But for the sake of being disciplined, like I mentioned, and what I'm trying to do with my trading this year for the rest of the year, I won't trade it no matter what. That's the goal for me on UNCY. It's a multi-day breakout. It broke out yesterday, kind of struggled, held 2. The idea for me is still always going to be like gap and crap reversal. So if I were to be playing this, okay, we got 220, it's at 220 or so right now. yesterday's highs or so. It's kind of messing with that level. Breakout level is here 215 or so. So kind of that 2 to 215 area interests me somewhat if it were to do a gap and crap reversal. But again, we are in a market right now, especially over this week. We had a couple runners, but we are in a market right now where I am protecting myself. My trade frequency is going to come down a little bit. What I'm looking for from the markets is going to come down, period. All right. Buy, gapping down for now. You know, just perfect gapping down. Markets are weak overall. We had a big Silicon Valley Bank, crazy stuff going on there. You saw that this morning. Yeah, huge drop. Trading halted. 106 down to 40. 300 basically bucks down to 40 over the last 2 days. And they're halted, right? Obviously, it's not a volatility halt. It's Okay. What's that? 10x? I can tell you just from experience, they're one of those tickers where I hear it and I know I don't want to trade it. But I am going to look at it. Hold on. Yeah. Okay. Again, questions if you're joining us on YouTube. Questions are in our free Discord, so I'm not going to be going back and forth between that stream and the YouTube. And if you want to join the free Discord and go ahead and ask questions all day, you can join the link that we're actually going to put the link on the YouTube channel here in a second in the description. Yep. Or if you just go to rwtrades.com, there's a little banner at the top for free reg. Free reg. Yeah. All right. So super key to be able to adapt, obviously. And that's what process is for me. You know, did we have runners yesterday? Yeah, we had a couple biotechs that ran okay. No follow through. Weak markets. Weak markets mean I need to protect myself. Okay, to the long side. When we got gap down, we got SPY panicking. Taking out pretty key recent lows there, and now, you know, pressing some. We're kind of getting into some territory. We're heading back towards last year's lows if it continues. You know what I mean? And that's not good. That's not good. If you remember what was happening as we got to last year's lows last year, everything fucking died, man. Everything got destroyed. So for me, it means swing trades. I've taken them all off. Everything I'm just sitting cash right now. And looking for singles, most importantly. Perspective, shifting perspective. A couple weeks ago, I was coming to the markets looking to make a good amount of money every day and risk a little bit more as well. And right now, I'm not. You know, you have to do that. My expectation today would be to try to make $200 to $500, something like that, which worked for me really well last year in terms of shifting my trading, going from somewhat poor because of those poor expectations to really, really good. You know, look for singles, look for small singles right now, let them add up, especially in the slow market. So we're not just bleeding out. We don't want to bleed out during slow markets. We just want to take smaller gains in slow markets. That's my goal, at least. Or at least when we have panic. Or sit on the sidelines. It doesn't hurt to not trade for a day. I know for some of you, it literally feel like you might die, but it's not the case. You'll live. You'll be okay. And stocks will be trading again, not tomorrow, but on Monday. Come back and do it again. We only have 2 minutes till market open at the moment. 2 minutes. So every morning, I like to give it 5-10 minutes, let things shake. You know, it'll become more apparent if there are going to be any setups. I don't see any particular setups at the moment. We got a UNC breakout, UNCY breakout, SI kind of interesting on this bounce after, you know, they're had some news yesterday. They're liquidating whatever. Somewhat like a bankruptcy bounce, I guess you could say here. You know, it bottomed out yesterday at $2.30. We had a little bit of higher low. Pre-market after hours held 275. Had a little PR this morning. Probably my top watch would be SI. And if you look at volume as well, very important, especially in slower markets, you know. If you look at dollar volume this morning, the most volume that's being traded is going through UNCY, M10, SI, right? All right, market open. I'm going to keep SI up for you guys for now. I'm personally watching SI, UNCY, M10, just this kind of group of top percent gainers for now, and keeping a close eye on the overall markets just to see how they're going to react this morning. So the beauty of how I trade now, I remember being, man, if I was, there's a pull on SI. If I was a noob, and when I was new, all I was trying to do was catch a morning spike the first minute of the day. So that would be pretty much UNCY. I'd be in it right now, no matter what. That would be my buy if I go back to my early trading. And right now I'd be feeling hella good, you know? Sorry. I'd be feeling great. Like I caught the morning spike this morning. You know what I mean? Odds are it comes back down, you know, below 220 or whatever, usually. SI, the pattern I look for in the morning is this, okay? I would actually be watching SI and not so much UNCY, personally, all right? I don't love the situation from a macro perspective on SI, you know, being liquidated and stuff like that. Gap downs, bag holders, bunch of bad stuff on SI. But for a pattern, this is what I look for in the morning if I have conviction. And I'm looking for a turn. You know, we're only 2 minutes into the day. I want to see 3, 4, 5 minutes. Not something like this. Probably see kind of a 3 hold. You know, in all honesty, I wouldn't really want to see much more than that. But I also don't want to buy it just straight on the panic into a predetermined level most of the time. I want to see it hit a low, perk, pull, consolidate, whatever for a few minutes, whatever it may be, whatever that combination may be. Give it a few minutes for me. And I'll be looking for bottoming action. UNCY to pre-market highs already, basically. And to me, that, you know, that becomes a target. So once it already gets there, it's not so much of a trade for me. All right. This is the first kind of turn I see here on SI. I haven't taken it, but this is what I'm looking for: is a small turn in the morning, some sort of sign that it's bottoming out, and then risk reward. Say I think right now low a day is in, which I can't say for sure. But if I think low a day's in, all right, we got 310 lows. We got 310 lows. We got 343 highs. That gives me what, 33 cents range to work with. To get good risk reward ratios, I need to have that my entry nice and tight to lows. Does that make sense? Once we get to 330, I'm 1-to-1. Because I am assuming it gets stuffed at high a day. That's how I like to trade these things. My assumption is when I go into the trade, unless we have really great markets or catalysts or whatever else it may be, my assumption that it is going to be that low of day will get stuffed or at least pull. And that's where I need to take profits. Okay? So that's the goal. Identify what I deem to be a turn, put risk on, take it off into highs. That's a single. When I'm in singles mode like I am today, if I was taking this, I would be all out into the 335, 340, 340 range most likely, or at least most of them. That would be the idea. I could make 20, 30 cents a share on 2, 3 cents, 5 cents risk. you know, and then in better markets, if we get through high a day, get to pre-market highs, which is 380. So if I'm using that as my next potential level of risk reward, there's a potential of like 50 cents there, you know? For now, new low. UNCY holding up for now. Nice straight morning spike, okay? I don't trade straight morning spikes. It goes back to what I was talking about yesterday about being a contrarian. It cuts through everything, you know? My trading sucked because of the spots that I bought at and buying strength and buying into high a day and buying new high a day and buying fucking breakouts and stuff like that, which are just a pain in the butt to me. I know people who are really good at trading breakouts. I can do them. I can trade them. I don't like trading them. I'm not good at getting size on them. I don't know where they're going to go. And oftentimes I don't know where to risk. Or I don't have a level that makes sense to me at least. Okay. So a chart like this, spiking in the morning, it's already a breakout. Okay, I keep that in mind. That breakout level is at $2.15 in my head. $2.15, 220, that area from yesterday as well. So anything up here is a chase. And then from a basic perspective, I'm using pre-market highs as any sort of target like I like to. Oftentimes these things will pull or get stuffed at pre-market highs or dead top at pre-market highs, you know? So if I'm buying into this right now, I'm chasing a breakout with inverse risk reward on my intraday chart. Okay, what do I mean by that? I mean my intraday lows are 218, 215. Trading at 240, my intraday highs are 250. You know, I'm less than 1-to-1 risk reward if it gets stuffed at highs and I try to buy this breakout right now. Does that make sense? Does that make sense, everyone? We're using the Discord chat again. I could move my screen to the right so you could see my ticker name. Oh, yeah, sure. There you go. Call, buddy. So you see that breakout, chasing a breakout, and I'd be chasing it into intraday strength. I hope it squeezes. We have nothing really running at the moment. Get back to that. You know, UNCY is the only one moving at the moment. And they're pulling right now, okay? The only trade I have when we get straight morning spikes like this is the first pullback, which is kind of what we're seeing right now. And I don't really like doing that either, so. But SI down through 3 now. But there may just go red. And I always keep in mind, okay? When one of these things is pushing towards red, it's only up 3%, 2%. It is also falling off other people's radars completely, and it's not even on scans at that point. I still need something with some momentum. That's not to say this won't possibly reverse here. It's heavily shorted, I'm positive, right out the gate, and has some support here, okay? After hours, pre-market yesterday, it was yesterday's low, was these 280s, okay? So maybe get a little reversal here and kind of a push. I don't like kind of the macro of this situation, which is they're a fucked company essentially. But from a price action perspective, you know, I wouldn't mind if this had been gapping up from like $2 and it was still at 3, or 250 and it was still at 3 and it was pulling like this morning action to pre-market support just like this. I actually don't mind it. All right. It would give me 40, 50 cents upside, 60 cents upside now. And I could get 5-10 cents risk. You know what I mean? If we get back to high a day or the market open price, that's all this setup is for me. Try to kind of bounce it back towards open. That being said, in hot markets, you know what I mean? It can be the absolute max risk reward entry, best possible long entry, period. I don't care what anyone says. Mathematically speaking, my entries are lower than everyone else. Unless you bought, you know, pre-market before me and you were holding all day, or unless you bought the day before or something like that. I am trading off of low of day in the morning every day if I can. Like this makes me, and it goes back to what we were talking about yesterday, psychology, rewiring your impulses and your instincts, because they're all kind of twisted. They don't help you in terms of trading. The impulse to buy green, buy strength, is strong within us. If not one of the strongest, I think, impulses that we have, and we have to get over. And so for me, I am reprogramming. You see that. I like to watch the one that's fading in the morning. UNCY, just straight spike out the morning. And look at UNCY now. It's pulling all the way back to 220 or whatever. All right. So all this chasing of the breakout into pre-market highs and shit is all inverse risk reward to what I do. And I only know that that's what it is because that's what I used to do. It took me a long time to get that sorted, man. So now in the morning, the one that's green, I ignore because I know I'm going to chase it. I know I'm going to probably get stopped out even if it goes, right? This was like the first pullback. There were people buying this pullback and now they're all stopped out. We talked about it yesterday. The first 10, 15 minutes, that range is the range that I use to contextualize my risk reward within a trade. New lows on SI momentarily there. This pattern right here, okay? Right here in SI. In a different circumstance, I would be long right now. If I had conviction that this was the bottom earlier, I might get cut out. If I had gotten long already, I'd get stopped out. I could put it right back on. Now, not necessarily this. I'm just using the pattern as an example this morning, okay? Possible short trap, possible bottom, possible short C that a new low just set in, but then immediately held. This one's only up 2%, okay? But if this were like a 30% gap or something like that, I would be looking for something like that, okay? And I could put it on. I could get 5 cents risk, 50 cents upside. That's how I look at it. Target 1 high a day, target 2 pre-market highs, and then beyond. You know what I mean? That's how that setup works. So when you look at a chart at the end of the day and it spikes through high day and it's a parabolic, you're going to find my entry down here and my risk down here. That is the idea. That is the idea. And it's risk-free. It's not risk-free. I don't mean risk-free. I just mean it's stress-free. Not completely stress-free, but it's way, way less stressful than buying breakouts, trying to buy high-a-day breaks and buy strength. Chase the UNCY breakout this morning only for it to go back to low a day. You get stopped out because you're trying to buy this first fucking dip, but only low a day holds and then it grinds up and then later in the day breaks out and continues. If that happens, just because you're right and the stock continues to go doesn't mean shit if your entries aren't on point and you can't go with it. Does that make sense? The longer I've traded, and it even continues to get tighter, my definition of chase changed big time, man. Big time. A 2-cent stock with a $2 breakout on a stock. Yeah, 220 wasn't so much of a chase to me at all. 210 even. But then when you sit back and realize that's 5%, man. That's a 5% move. You're chasing it up 5% from breakout level, or up 10%, some of you 20%. And if you're a chaser, it'll work sometimes, but a large portion of the time it's not going to work. Okay, 1 second, y'all. Hold on. Right back. Hold on. Sorry about that, everyone. Having some site issues. A bunch of people going to it. It crashed our server. So hopefully it'll be up soon. But if you're on, if you are watching on the site, if you want to go, just click the embedded YouTube and head there. You won't have any issues there all day. So that's what I would suggest. Okay. Okay. Okay, y'all. Okay. So UNCY, high or low, okay? When I get morning spikes, this is my favorite way to do it these days, if I have any conviction, is not even playing the first dip, okay? It is literally if it goes back to low a day. That is the trade to me. It's still low a fucking day, every day. That is what I'm looking for. I don't care if it spikes in the morning. I don't care if it pulls in the morning. I'm looking for a low. And if I can play off lows, you have to think to yourself, if you're shorting this into pre-market highs, it pulls back to lows, sets a higher low, and you didn't cover, now it starts pushing back towards 240, and you're sitting there, you should have taken the single maybe if you're short. That sort of idea, this is what I look for. Extra patience, in other words. When everyone else is trying to get in on a dip or buy spikes and buy strength and buy breakouts and buy this and that, you just wait an extra 5 fucking minutes and see what happens. You'll get a better entry 99% of the time. For me, I'm going to get a better entry if I'm just more patient than everyone, buying the weakness before everyone starts buying it. Then I sell it to them when it starts to break out. That's the idea, is that when stocks are spiking, I am selling and I'm buying the weakness in the morning. You can buy it after it spikes too, Just like this. That's not to say this is going to work. The markets have sucked this week. Look at them. Look at what's happening on SPY. And I told you earlier pre-market, when this is happening on SPY, okay, when it's not just choppy SPY or choppy fade on SPY, but panic on SPY. Look at the last week, man. All right? We had a nice 3-day push to 410 last week, 408. And then it's been death and destruction basically for a few days. Again, we're taking out lows. We got some more lows here that we may be taking out. Then we got 375, right? The chart's doing pretty much what I was kind of expecting at the moment. We had that downtrend. It was trying to break out of the downtrend in terms of overall markets. I think big players used that push, to 410 to 420 to liquidate stuff. That's what I think. That's what I thought was going to happen at that time too. And so far that's coming to fruition from a macro perspective. Macro drives my trading. Macro. What are going on in the overall markets? And then it gets me down to the patterns. And then what patterns are working and how is small cap, first of all? How are big markets, then how's small cap? Let's just talk process. That's what I'm thinking every single day. Small cap's been okay this week. It hasn't been terrible, but it's also been just a handful of plays each day. All right. BNED. Nice morning spike on BNED. But that's what it is, a morning spike. So I personally ignore it. I don't care what it does. MYPS, illiquid, higher priced, not high price, but liquid. LUNR. Ooh, nice. Really nice spike on LUNR. They're trying to have a day 2 after a week open. Let's check out OCEA from yesterday. Also a week open, but they pushed this morning off of 850 so far. Nice move on OCEA yesterday. Percent change 5 minutes. I like to toggle back and forth just to see if there's anything running that I'm missing. Looks like M10 may be reversing this morning. Already missed that. There's a reversal on M10 too, right? Only 5 cents, you know, and then weird like 3-cent consolidation, you know? So not ideal, but from a pattern perspective, it's still okay. It's what I'm looking for. I'm looking for fade in the morning, get good risk reward. In this case, still playable, you know? I guess it opened at, we'll say, what, 59 cents or so. So you only have 3 cents kind of range there. It was kind of wacky. But the idea is still find, locate lows, risk off lows, sell into highs, sell into pre-market highs, you know? What's up, bro? Dude, I
know he's here. He's here and like, what the heck?
Bro. Bro, I know.
What the heck?
Bro. So fine. Well, we got extra donuts and we've got a box of coffee, y'all. Sorry guys, we have, we have an event going on here, so obviously there's going to be some people going. It's kind of inner circle of some of my students. So forgive the noise if you hear them. Okay. Let's go. Again, especially if things are slower, pre-market and after hours, I really like this filtering just by percent change 5 minutes, That being said, if I don't have tickers going into the morning that I'm interested in, most of the time I'm better off sitting on the sidelines. You know what I mean? I like to have a plan going into things. If something just kind of takes me by surprise, generally speaking, that's because it spiked already. Okay. And just by the nature of it, I'm going to be chasing it somehow, somewhat. Looking for a dip, random stuff. All right. I really like to stick to my bread and butter in the morning. Look at UNCY back to high day, like I was kind of mentioning. This is the entry. If you're short and you didn't cover, just like when you're long, and you get that perk to high day and you don't take it and then it starts pulling back, you get in a kind of a weird psychological state immediately of regret, and fear. So using that idea is important to me across all my setups. Low of day is important to me almost across all my setups, okay, at this point, and I'm really settling into it. I've been saying that for a long time, and I at this point, it's just what I am going to do, all right? I'm going to maximize my risk fucking reward on every trade. I'm going to do my best to do that for the rest of this month, That's kind of my main goal, is to make sure I'm buying off lows, especially when things are shitty right now in the overall markets. It really behooves you to maximize risk reward on your singles and then take singles. That's the whole idea for me. Be in singles mode, take those singles until the markets tell me otherwise, and I'm selling too soon all the time. Does that make sense? That's my MO. When we get into a slow market, I don't have to catch the first one that runs 1,000% on the week. And I rarely do. I don't have to catch the whatever the next big runner is. I am going to miss that most likely. Okay? Because even if I nail the gap and crap reversal on it, even if I'm like hitting lows on it, okay? I'm selling a lot of them in the highs. It doesn't matter until I've seen runners, until I've seen 100%, 200% runners again. I'm selling it in a high anyways. So I'm going to miss it if it continues most of the time in a slow market. That being said, the first one that maybe I take or don't take and it rips through high a day and through pre-market highs, that will change my trading going forward. So I'll be a little more aggressive the next day if I see it. I'll adapt, in other words, which is what we have to do. And I let my trading tell me that. If I'm constantly selling too soon, I'll take a look and say, okay, maybe this pattern's really fruitful right now, and I need to size out less into high a day. I need to size out less into pre-market highs, which after we get through trading this morning, that's what we're going to talk about. We're going to get into entries, how I like to play them, and how I like to manage risk from a really general idea. We'll look at some different charts and stuff like that. But that's the goal, Max risk reward, because we are playing the maximum garbage that we could play with. That they're the worst stocks in the world. They're all trying to dump shares on us, on the idiot retail traders. That is what they're doing. And that is what we are in terms of the stock trading realm. We are the pawns. We are the pawns that big money use to pad their pockets, and we are the pawns that these companies use. Their own investors, that's what they use to just stay alive and put cash in their pockets. We give them cash. Institutional investor gives them cash, Institutional investor dumps on us. That's the game. And to set yourself apart, you have to literally do everything different. You do. The longer I do this, the more it becomes clear. You have to become a contrarian. You really do. You have to set yourself apart from the sheep. And that means not buying breakouts, and not buying high day breaks, and not buying intraday highs, because that is all noobs know. That is all crappy traders know. They can't help themselves. They buy impulsively through highs. They buy when it's spiking. They can't help themselves. Like right now, for example, there's a whole legion, a bunch of people who are just dying to be long this. Where my perspective is I was supposed to be long this here in the 220s, and I wasn't. So the trade's gone to me. I'm not going to buy the strength. I'm supposed to be selling here. Okay? I like to sell into high a day. It doesn't matter if it's gap and crap reversal, if I'm buying a dip, a morning dip like this. I like to sell in the high a day, and my next target's pre-market highs. That's it. Take off into those two, and then if I get more, then I get more. If it goes straight through pre-market highs, I get more. But I like to sell in and out of these levels. So I will sell shares into high a day. I will sell shares out of high a day here into like the 245, 246 range. That's what I like to do. In and out of support and resistance as we spike, take profits. It feels weird at first. You don't like it, But the first trade that you have where you have sized out over and hit a move, or you are sizing out over a move, you were like, holy shit. Game changer for me, sizing out, game changer. It solves the FOMO, and I don't have to get a new average, take a full position as the stock goes higher and higher, This entry here, 244 was high day. This high day break entry is my absolute least favorite. Number one least favorite thing you can do as a long trader in the markets for me is this entry here. Now, there are times to play it. You know, if this consolidates all day, if it pulls back, consolidates, and into the afternoon does something, then maybe it's a little, it will change my opinion of that level, you know? Pricing, price action, the chart, the volume, it changes my opinion. So right now I would not touch this at 240, personally, even if it goes. Maybe this afternoon I would, okay? It just depends. It just depends. But what I'm trying to do in these markets right now is be so disciplined to the fact that I'm playing lows, playing off lows, and nothing else. And I'm going to have tight risk. Still good risk reward on the single. That's what's key to me. Here's the thing. Everyone's like, take singles. But if you're buying this at 245, where the fuck is the single? Okay? Where is it? The single from here would be, I guess, pre-market highs. But in reality, the only key levels are high day, low a day. This is probably going back to 220 if VWAP fails. You know what I mean? To the 220. So that's the idea for me. Don't be... This is least favorite entry possible. I guess my next least favorite entry would be like a pre-market high break, you know? High a day, pre-market high are targets, okay? If you can literally get that through your heads, for me at least, if you want to experiment with getting away from chasing and buying strength and all that shit. Sorry, hold on. Just kind of going through tickers. Top percent gainer still MTEM this morning. Looks like new highs, right? Little reversal there, a little higher low, new high day, you know? And even this, if I'm playing lows, not ideal for me. Didn't give me range. Didn't give me range and volume to work with. That being said, if all I'm seeing last week, if we were having like 50-cent runners, 40-cent runners that were going 50, 40 cents to a buck, okay? Yeah, MTEM would have been way more attractive to me this morning. You know, even with kind of funky action, that's consolidation. You know, I would play off lows on consolidation. You can even see that little perk through low a day there, that little crack through low a day that held to really clean was the start of the bounce. So ORTX fresh reverse split today, added to the watch list. They did a 1 for 10. They got like a 7 million share float now, something like that, it looks like. Keep eyes on BNED. Back to low a day. Same principle here. If I want to buy a stock that just spiked in the morning, this is, you know, the entry is going to be based off low of day again, which is weird, I know. It used to be, to me, that means it's pretty much dead by the time it's like, if it's going back to low a day from high day. And this one, you know, not high hopes for, obviously. But getting a little bounce on SPY this morning. Good to see. Good to see, good to see. I don't mind death and destruction, you know? We're getting a pretty damn good bounce here so far this morning. We'll see what happens. But I don't mind I don't mind bear market, man. I don't mind. I'd rather not just be full blown bear market again. But which we haven't really gotten out of yet, you know? I don't mind it. More penny stocks, more reverse splits, more bottom bouncers, more bankrupt stocks that we can bounce from 10 cents to fucking $2 and a buck. You know, that's a big deal for small accounts, especially. Small accounts, much tougher to play higher price stocks. That's how I ended up in small cap in the first place. And I never left because they're still the most volatile. I can still make the most money off small cap every day, honestly. What I used to really like about small cap is it didn't really move with the overall markets as much. Of course, we're in a bull market for years. But nowadays I have noticed, you know, some of the main plays will start to react to SPY if we get panic on SPY. So it's become a bigger part of my process, in other words, you know. There was a point in 2021, 2020 where I stopped looking at filings altogether. I'm like, they don't matter. You know, they were keeping me from trading. stocks that were going 1,000% over the next like month. So, but in 2022, things changed, and I dialed that part of my process back up. Check out filings. When there's less volume going through these tickers, that dilutive becomes much harder to get through the dilution when they're dumping on us. Which we'll talk about that today too. If you guys have any questions, you can shoot them in the chat. I'll try to keep up in the Discord chat. For those who aren't in it, we did open up a free portion of the chat. I'm going to put weekly watch lists in there. That's my plan. Kind of every weekend, hopefully be able to get you guys something to look at there. But like I said, the site, we had issues with everyone kind of trying to join at once. So hopefully throughout the day, it should be good. All right, let's continue. Cool. Let me know if you have a bunch of questions. Everything I've said made sense this morning so far, especially coupled with yesterday's work that we did. You know, a lot of you, especially like if you're going off my YouTube videos, they're old as hell. And my trading has changed a lot since then. A lot's the same, but it's a way different ball game. What I do now on a daily basis, how I find the trades and what I'm looking for has changed dramatically over the last several years, even over the last 2 years, last 6 months even. Quick eyes on top percent gainers one more time. MTEM already through high day, dead to me. It's dead to me. I hope it spikes. I hope it goes to fucking $3 right now. That'd be sweet, Because if it did, I'll probably hit, you'll see me hitting the 50, 60 cent stock somewhere. That's what I would do. That's where my attention would go, as opposed to trying to chase something that's up a couple 100%. My attention has always gone to where will this volume flow? How can I find the next ticker? And I got really good at it over time by thinking that way. If you're not thinking that way, you don't know. You're just literally going to chase whatever keeps hitting your scan over and over again because they're up and spiking. I've been stuck in that, and it can still happen to me. If I start getting undisciplined or go on tilt or start revenge trading, you'll see me buying high day breaks. I haven't done it for a while though, so it's good. For months and months. UNCY holding up decently, still the best odds of, I think, any sort of continuation today, and has a reason to from a daily chart perspective, volume perspective. Good volume, good trading action. But again, it's a breakout. It's already broken out. I'm not going to trade it. I'm not going to trade it. Like this support would be attractive to me. You can find support that looks attractive that you could risk off of. But at the end of the day, especially in markets like this, they go back to low a day most of the time, This one was decent in that it was a breakout, pulled back, held the breakout level, pulled back again already. Maybe it needs to test again. UNCY this morning? I'm saying 218. I'm talking about market open low a day, right? Market open low of day. And why do I like to wait? Because volume, man. Always volume. Volume tells me the story I need to know, the real volume, okay? Not the pre-market volume. It may look liquid and it may trade really good pre-market volume for that ticker. I do take that into account Because if it's trading good pre-market volume for any given ticker, that's a good indicator it's going to trade really good volume during the day, okay? But I want to see what happens when that really good volume comes in. Are they going to dump? You know, do I get a reversal? Is it going to squeeze? Are it going to be shorts getting trapped or longs getting trapped or bag holders? What's going to happen? Okay. Ooh. Now that support looks shitty. You know what I mean? Like, and the thing you have to understand, there's VWAP. There are a bunch of people buying the dip up here. There are people who are still fucking short holding a bag from buying the high day break earlier today. You know, you got to take this market psychology into account always. Buy zones are here, sell zones are here, and you keep it really simple like that. And it feels very, very weird at first, but I promise over time it's like a warm blanket to me when these stocks go down towards low of day, or I'm able to kind of play that way. That being said, further into the pattern, when it cracks and then go into low of day, it may hold, it may not hold. It becomes way less predictable to me. Hey, we're live, guys. So again, entry matters. You know, any sort of chasing mid-range or into highs, and even if this goes, it goes without you. You know, that's not fun. It's even worse, you know, because a lot of times I know with myself, that would actually reinforce my original idea. Does that make sense? Like, oh shit, I was right. And it stopped me out by 5 cents and went without me. Like that'd be like, I'll do that again. You know what I mean? Kind of weird like that. But even if I get stopped out and I see a stock go without me, I'm like, oh fuck, I was right. No, you were fucking wrong. That's why you sold it. You were wrong, right? I do start watching for trend in the morning when we start getting pullbacks like this, just in case. Give it a little doodly here. Perfect. But I'll start watching stuff like that. It's not clean. Not clean enough for me, generally speaking, right here. But trend lines and stuff, indicators, they're all just another tool. Higher lows. Really, on a multi-day especially, gotta zoom out. Get to like the 30-minute chart. I like to look at what happens when highs break, how far does it go as well. Kind of as a rule, as a pattern, you know? New highs and lows and see kind of what kind of range it has, but. All right. Let's just go through the tickers one more time. VNet spike, higher low for now. You know, the idea would be to play off a higher low and use low a day potentially, which I don't love either. But that would be the idea. Extra patience in the morning. Extra patience when you're dip buying. Generally speaking, you'll get a better entry in general. You know, when I'm playing gap and crap and versal in the morning, especially then, if I'm not sure if it's a low, and I think it might be, depending on conviction, all right? If I have high conviction and I think the low is in, you're going to see me in, okay? When I have high conviction in a setup, and I have, you know, conviction in levels and the markets are great, you're going to just see me in. When I think the low is in, I will be in, okay? And I will try to be as close to that level as possible. If I don't and I'm not sure, markets are a little bit funky, I give it a minute. I give it 2 minutes. See what happens. 9 times out of 10 saves me. It either saves me from having to cut and take a loss on that ticker because I'm premature, or it provides me with more conviction, that little extra waiting time, and I get to see it develop and I get to see a higher low or something like that, and I get more size and more conviction. Okay? And again, I'm watching fades in the morning from the perspective of a short seller. If I were short this stock from dead top or from anywhere in the ticker, what would happen? Flip it upside down. If you were short green is, sorry, 1 second. If you were a good short seller, green is good because it's giving you better risk reward as it spikes. Short sellers, if you're a good short seller, you like spiking stocks because it's coming to you. It's coming up and up and up and up and creating levels. You know, especially once it tops out, you have lower highs. Now you have levels. You want it to come back up. I know that from short selling, you know, especially if you missed it. There are times you miss it, you want it to come back up so you can get short, you know? Just bounce to VWAP so I can short this fucking thing, you know? That's what happens to these guys. They get really aggressive, okay? And I like to think like them. You know, that's how I got profitable, was by understanding where Tim Gertani was and then getting away from that motherfucker. In other words, not buying that guy's shorts at the top and then selling them back to him at the bottom when he has to buy it back and cover. Once you understand that dynamic, I'm like, okay, so I need to buy where shorts are covering and sell where shorts are selling and put myself in harmony with that. And what's funny, when you put yourself in harmony with that, you're putting yourself much more in harmony with the institutional traders that are dumping shares on us. You know, the reason short sellers, a big part of the reason short selling works so well most of the time is that they are going against the grain. Everyone's buying the stock and they're short selling it. It's naturally, you are somewhat of a contrarian if you're short selling stuff, because the majority of retail traders are long bias, right? Does that make sense to everyone?
Yesterday was like such a big runner.
Yeah.
It was a first green day, low float, good news, all these good things. I noticed on social media a lot of short sellers went after it.
Yeah.
Why is there some? And I went long on it yesterday, but because all these talented short sellers went after it, makes me think that I should not have gone long on it if all these people are looking at that and looking at it as a short sale opportunity. What will it cause them to look at it and support it?
It went from 4 to 9 pre-market.
It's like so overextended.
It was being shorted pre-market. I guarantee it. It's probably being shorted in the 7s and 6s and 8s and, you know, pre-market. They can't help it. That's why we got pre-market squeeze, because it was already squeezing pre-market. And then it just gapped up way too big. And then whenever we get action like that, you know shorts are there, especially on OCEA, because there wasn't too much else to trade yesterday. So you know they're concentrated. All the short sellers are going to be concentrated on one ticker. And then, you know, it halts down, it halts up, it halts down, it gaps way down, it halts down. When that perks back up to 950, yeah, you better believe that they're short selling that, you know, that first perk through high day. And they're definitely short in the double top, you know, and that's what it is, you know. Like I said, this spiking is good. There are shorts like just circling up there. I like to think of them like sharks, just like fucking sitting up there waiting.
Blood in the water.
Yes, blood in the water. And when they see the blood, you know, then they all fucking attack it. So, and when they all attack it together, it goes up. That's how market psychology works. When everyone is short, they all have to cover at some point, right? That's what we talked about yesterday. It's why buying strength, I don't like it. Because at some point, the buyers exhaust. At some point, who's left to buy? If everyone bought it. That's what happens with breakouts. Everyone buys the breakout, but no one buying it 50 cents up unless it's squeezing and shorts are buying it. You know what I mean? And people chasing and stuff like that. But that's how I look at it, man. You know? When everyone's buying, I need to be selling as a basic principle if I want to be profitable. Does that make sense? And you'll see it time and time and time again. The highest volume of the day is the high day break, and it gets stuffed. You'll see it time and time and time again. Everyone buys it, shorts included, who are covering. All the shorts who are covering, all the longs who are buying. And when that's exhausted, it goes down. And when it gets back down through a high day, every fucker who just bought it is panicking, right? That's why I don't like that. I don't like being caught up in that wave. You know what I mean? I don't like it. I used to just do it a lot because that's what you do. We trade breakouts. We trade strength. We buy high day breaks. That's all I knew until I realized that that is where Tim Grittani was. And I realized my entries match his just the wrong way. You know, he's shorting it, I'm buying it. That was the start of my evolution to get to where I got to today, which is buying low as I can, and then trying to teach people that we have to buy as low as we fucking can, you know? That's crazy talk, but it's the truth. It's the truth. No problem, man. But OC, yeah, just know when stocks spike, shorts are there. They're there. Size down when we don't have good markets, man. That's what I do. I just size down. What I do is I look to make less and a risk less. Okay. So on a normal day, normal risk for me, just run of the mill market. We have runners and markets are okay and not volatile to the down or upside. Will be market. It's always market dependent. Okay. I just adjust my perspective and expectations based on the runners that we have. All right. So if today we get to the scan at the end of the day and this is all we have, all right, ignore ORTX's reverse split. Say I get to my scan tonight. I don't open it up till tonight and this is what I see. 30% gainer as my top percent gainer. And tomorrow I wake up and there are stocks and only gapping up 20, 25%. I'm going to be hands off as hell because I'm thinking to myself, maybe top percent gainer tomorrow too is only going to be about 30%. I use my scan, the patterns within my scans to also change my perspective. Okay? That's important. The scans tell me what I need to know. I can go on, you know, I can, during periods of time, if there are no percent gainers, I don't even need to trade so much. And I can literally just go to my scan at the end of each day and see if something changed. So I see if there's a runner, something for me to work off of. Okay? What are you cheerleading about over there, bro?
He's weird.
I love it. It's a great swing, man. Great swing. Have you locked any?
Yeah.
Good. Nice. Oh, you locked half? Nice. Nice, Gilligan. What is SI doing? Anything? Nice bounce to VWAP there, you know? Nice bounce there. And that's the idea. There was even that. There's a trade there, you know? There was a trade there. But again, when it got down to like 285 and it's up 2%, yeah, then you're looking at basically playing a red-green hold. Okay, that's what that pattern is at that point when it gets all the way to lows. You're playing like a red-green hold, green-red hold. And it's still trying to hold it, you know? So again, way less stress too. Way less stress, because even if this did snap 285, 280s, yeah, 280 maybe, 270, like you're not putting yourself in positions for violent pools. That's a big part of it to me, these entries. Make sure that I am not putting myself in danger to where I can't control this trade anymore. When you buy strength, when you chase, you put yourself in terrible positions. And again, it's all we know to do. And we don't know that that is what we're doing when we are doing it. We don't know when we are chasing that we are chasing until we know that that is a chase. And that definition of what is a chase is subjective. You know? There's no fact what a chase is. Chase is subjective and personal to everyone. And my definition of chase has changed dramatically over time. And as I've gotten better, that definition of what chasing is, that range of what I would deem to be a chase has gotten smaller and smaller and smaller, to the point basically what I deem chasing to be is if it drags me out of my risk reward. That's it, my risk reward ratio, okay? So say I'm playing BNED, all right? And I think that this lower high should hold, and if it doesn't, that's where I want to risk, all right? 215. Sorry, 1 second. 215, okay? 250 is the goal. Maybe 215, maybe VWAP first. Once these things break VWAP and get well below VWAP in the morning, oftentimes VWAP is going to be stuffed if it gets there. That's not to say that at the end of the day it can't get over it and do more stuff, but from a price action perspective, when we get spiked like this, pull, crack through VWAP, big pullback towards low a day, oftentimes the bounce goes to VWAP. Why? Short sellers, longs, bag holders who bought over VWAP, okay, and who trade VWAP. People who bought this dip because it was a dip to VWAP. People who set orders here and then just saw their orders get smashed through VWAP, okay? You're going to have these bag holders left who are long. You're going to have short sellers who are left who are long from here, the ones that didn't cover. You're going to have new shorts here, probably new shorts in the VWAP, and that's why these things can then A, B, C, D, and do other stuff as the dynamic of the price action and market psychology and pattern psychology changes over time. So for me, I'm looking at this. When I get a dip, risk has to be whatever it has to be to get me a decent ratio to get it back to VWAP on my single, because that would be my idea on this. Next target, 250, and that's it. Then you're through high day and, you know, all that good stuff. So if I got low a day at 215, you know, and I'm okay, say 220, all right, I've got 5 cents risk, and I've got 15 cents upside, okay, it's a 1 to 3er. But that moves another 2 pennies, another 3 pennies, and that ratio starts to dramatically change from 1 to 3 back to 1 to 2 to 1 to 1 really quickly. Does that make sense? And during price action, even if you're looking at, you know, 30 cents range, when it moves that 5 cents, 10 cents, it moves 10 cents, that's 30% of the range. You know what I mean? You're chasing 30% in other words. So that's how I like to look at that. You know, multiple targets. The first one in this case would be that VWAP area. And then the second would be, you know, 240, 250 area, and that's it. Yes.
Proven. Intraday.
I'm not sure what he means. Like, there's not much to do about it, because if you're proven wrong intraday, you mean like take an L and then it keeps going?
Yeah.
I ignore it. If I was right, that's fine. 100% conviction, that's fine. But then once it spikes and it's like day 2 or something into it, and yeah, you could play maybe day 2 gap and crap reversal. It's going to depend on the market, obviously, in terms of how much legs these things ever have. So that's always my first question. But, you know, anytime I miss something, naturally, if I want to trade it, I am going to be FOMO trading it, no matter what. Even if I'm like, I'm going to objectively find a great entry now. But I missed the actual great entry that I saw in real time, my entry. Now I'm like trading it later on in the chart, you know? Most of the time, there will be an element, at least, of FOMO involved in me trying to get back in it once the move's already happened. So it's a dangerous spot, you know? But if you can find good risk, if you can find good reward, that's fine. You know, I'm not trying to say that this is the be all end all. I'm trying to tell you what I do and what works for me and what's really working for a lot of the people I work with now and try to teach, and a lot of the students have seen not just a small change in their trading, but a complete 180, complete transformation. 100% 180 from not a just a trading perspective and a P&L perspective and losses, their understanding of risk reward, that concept, but also psychologically, you get a flip when you I mean, if you're struggling because you're buying breakouts, you're buying strength, you get an immediate shift of psychology. And it's tough at first for some people. For some people, it's natural. They're like, oh my God, this is amazing. The first time they try cap and crap reversal, and they understand what the power of it at that point, that they were risking 5 cents and they got $1 reward from it, you know, and it went through high day and through pre-market highs, and it was a 200% runner that day, and their entry was when it was up 15% that morning. Okay? That's powerful as shit. Okay? So you will find, a lot of you, if you can get away from the buying of strength all the time and chasing, you're gonna have, it's trading so much easier. It's so much less stressful. It's less of a scam, you know? You shift the paradigm. You get yourself away from the rest of retail. Get yourself away from the rest of retail. And this is a universal tactic, okay? The more I read about it too, this is something I've always known intuitively. The more I read about it, it's pretty much mandatory. To maximize risk reward, I gotta be a dip buyer in the mornings in terms of small cap. And across all setups. That's why it works, because as it goes down, your reward, your risk is being minimized and your reward is growing. Does that make sense? As a stock goes down, your risk is being minimized if you haven't entered, okay? The good short sellers, it works for them because when the stock goes up, their risk is being minimized. When it spikes into high of day, like say BNED just starts spiking towards high day here, yeah, my best risk reward on BNED at this point in the chart is buying it, is shorting like 246, 247, 248. And then, you know, kind of risking 250 area, okay? Same exact idea, inverse. I am not trying to be up here buying. I'm trying to be near lows buying and sell into highs. And if you can just keep it simple like that, it sucks. You get stopped out a lot. I get stopped out a lot too. It's not magic. It's not the most, you know, it can be magical, but it's not magic. Man, I'm telling you, it's priceless. I'm telling you. There's a lot more to it. It took years, you know? And you still have to have the trade experience. You still have to understand what stocks can run and can't run and when. Stocks aren't always running all the time. I talked about it yesterday. Same exact catalyst, same ticker, same everything. Different markets, I trade them way differently. It depends. Different days even. Okay? Different days. The same exact, you can, I mean, and you'll see it. The same exact PR, two companies, two same floats in very identical situations. But markets aren't right for it today, but yesterday they were great. And it won't run, you know? It can be baffling at times, but that's how trading is. It's always changing, always adapting. One second. One second. Okay. It is now an hour into the trading day. UNCY pushed to pre-market highs here. And that would be target for me, number 2. Generally speaking, I'm using pre-market highs as a target when I am sizing out from stuff. F strands, VS is up. And just a weak scan today. What's that? No, 1 second. Yes, question. Go ahead. I prefer lower floats. I prefer. They move faster, period. I prefer lower floats, you know? I like when they can move pretty freely from low a day to high a day. That's what I'm looking for, you know? And I'm looking, and what you'll see about this setup is it's like it's usually about 5 to 10 minutes to set up, and then it can be a 1 minute trade. That's what's crazy about it, okay? That when that volume comes in and the shorts do start to cover together, it can go straight back to high day and through it. So that is the idea there, okay? It's like a 10-minute setup and a 1 to 5 minute trade. A lot of the times to get back to high day, I have to keep that in context so that I can sell quickly. I got to be able to take it off into high day when everyone's still trying to kind of buy it, and that gets stuffed because short sellers step in there too, okay? Everywhere short sellers are likely to step in are the spots that I like to take some shares off too, you know? Into that strength too. Get a good price on it so when it dips, I get to hang around with my sweet average at low a day. With my sweet low a day average, you know, just holding on for dear life as it spikes, and I'm trying to play price action objectively, sell into strength, hold if I need to hold as much as I can, especially after I've locked, you know. Then I try to be extra patient. We get to pre-market highs, and then I'm trying to play a squeeze. A full-blown squeeze, which is the goal. The goal when I play gap and crap reversals ultimately is always to get through pre-market highs and get a squeeze, okay? Excuse me. My perspective is what makes me sell at high a day or pre-market highs or hold longer. My expectations. What is going on in the markets? Do we have runners or not? Right? And I can tell you today is not a good day. Today's not a good day for me to expect anything other than what we already have on the scan. I'm not going to look into these tickers and see something extra for now, okay? There we go, Lumen. Yeah.
Going back to the low float trading, so they could be micro floats, Nike times have the same size, or regular micro float, less than a million.
Yeah, the micro floats. Oftentimes I'm not in them. Oftentimes I'm just not in them because of that, because of risk reward, and if I'm trying to get in a stock and the spread's $1, you know, like 75 cents, and it's moving $1, you know, $1, 50 cents a second, or, you know, they can get crazy like that. Yeah. When those are up and they spike, I oftentimes just miss it because I can't find risk. Can't figure out risk. And if I can't figure out risk on those are the most dangerous places for me personally, I know, to put myself. If I don't have that risk where I'm like, this is my risk. Yeah, it gets tricky. So, yeah, you can either size down if I have a risk level. I'll mitigate slippage by just sizing down most of the time, you know, because I also know if it's going to be really rangy, I don't need that many shares, you know. So for me, it becomes a size thing. Just try to size down a little bit to mitigate the fact that it can drop $1 or $2 or $5 or $10 in a second or whatever it is. And then, you know, sometimes with bigger floats, I'll take bigger size too and look for smaller range. It's kind of weird, but I understand that they can still move. Oftentimes bigger floats will actually be a little bit more clean in their movement because the floats are big, even if they've got good volume coming in. So there are times where I will actually push a little bit more size and get more scalpy because it's a big float. You know what I mean? And if it's really liquid trading a lot of shares in a clean sort of fashion, you know, most of the time I avoid the bigger floats though, because I know I'm going to just be sitting around and watching paint dry. That's not fun. That's not what I'm looking for. I'll also adjust for big floats at times by switching to like a 5-minute chart. If I know it's going to be slower moving, I will put on a bigger time frame. so that I don't have to sit around just watching little 1 minute candles not do anything. You know, the 5 minute will give me a little bit bigger picture and a little bit more range per candle and stuff like that, you know? Okay. Yeah, the threshold's probably too low for people sitting further away, but that's okay. I see. With the reversal, am I buying after a higher low or also when I think the first low has been set? It depends. It depends. It doesn't have to be a higher low. It can be the first green candle where I see the turn, where volume comes in and you're like, oh, it's palpable, generally speaking. The more you watch it, you know, the more you do it, the more you learn about it and understand the dynamics behind what's going on, the more you can take the market conditions into account and market psychology overall, the closer you'll get to understanding the price action and seeing the turns in real time, okay? For me, the best turns are palpable. Like, in other words, I'm watching it from the perspective of a short seller, and it just looks so weak, just weak. You know, that's the whole point of that setup in the morning. It's weak, so longs ignore it, shorts pile in. You know, that's the idea. So the selling happens there. So there are times where, yeah, it's like where that reversal candle will look like this, and I'm in. There are times where I do want to see it push a little bit and pull and work itself around. Okay. So it's really case by case, but I just kind of take, I use everything at my disposal to try to not predict the level, but have a few levels in mind every morning is what happens. I'll have a few levels in mind when I look at a daily chart and I look at the pre-market chart and I look at the half and whole dollar levels and all that good stuff. That's what I'm doing. I have a few preconceived levels, but not set in stone where like I'm fucking buying it here, you know? I like to watch the price action, let it shake. Higher low is fine. You know, I don't mind higher low. Higher low is great. But oftentimes it's going to happen and not necessarily give me a clean higher low. I have to see the turn, okay? And it will be palpable, like I said. If I'm watching it from the perspective that I'm hoping it's going to keep going down in the morning when I'm looking for an entry, I hope it's going to keep going down, and it's weak and weak and weak, it'll be palpable. You know, a sudden shift in price action and in kind of the tape even at times, you know, you'll see a flurry of buying coming through. Big volume into like the very low of day at times, just like we see big volume into the high of day. Max panic, so it happens a variety of ways, and oftentimes I get stopped out. And that's very key for me. Just as important, getting the good risk reward, taking it off into highs and pre-market highs is cutting. So important to cut. I can always get back in, you know? But cutting there is what allows me to have that 3 cents risk, 5 cents risk, and maintain that over time, where I'm always risking 3 to 5, 10 cents, maintaining that risk and always making 20, 30, 40, 50 cents a dollar, $2 a share, you know? Maximum, making that juice, you know, well worth the squeeze, getting the max juice out of these things that I can. Because I know how I trade. I like to size out into strength. I'm generally speaking not dead bottoming, dead topping. What I'm trying to do is risk low of day. I'm usually not gonna dead bottom it. You know, I'll have risk. That's what that's for. But then I'll sell into high a day. I'll sell into pre-market highs. Sometimes my last sells are too late. You know, oftentimes my last sells are too late, and that's perfectly fine. All right, that's perfectly fine. But I realized with the way I like to trade, if I'm basing it off low a day, it doesn't matter. I have amazing risk. I'm sizing into high. I'm taking it off into high day, the new high day, the pre-market highs. When all is said and done, my average out is going to be at times half that move. You know, half the move from where I bought it to where my last sell was, from dead bottom to dead top of that move. I'll have sold, and my average out will be somewhere in between there. You know what I mean? And I don't put too much weight into it. I don't care that I didn't sell all of it at the top. At least I sold a quarter of it at the top, you know, from low of day, where most people just fucking bought it for the first time right now through high day, you know, or through pre-market highs. And I'm hitting my second fucking price target through pre-market highs. Okay. Being confident in the turn, even if it's right on first turn, or wait a little. It depends. It just depends on my conviction and in the markets. You know, there are markets where I'm hands off this pattern, even just not playing gap and grab reversal because maybe the juice isn't worth the squeeze. The gappers aren't good enough to create enough range for me to use to get good risk reward and make it worth it. Okay. I'm gonna grab a coffee. 1 second. Got two. One wants to. You have 24 donuts.
You're mute? That's okay.
A singing contest. Trader Idol today.
Okay. All right, we're gonna do a little bit more live trading here. See if there's anything good to kind of to watch for good examples, and then we're gonna wrap up live trading and get into way more important stuff. There's no chat on the YouTube stream, right? What's that? Back to lows? That's not Barnes and Noble, is it? Barnes and Noble Education, do they have like a separate company for educational services or something, or is that's not the bookstore, is it? That's what I thought too, but I have a weird feeling for some reason
It's
that
misleading.
that it's actually like a separate
This
company
is a
or something.
retail, specialty retail.
Yeah, I mean it should be then.
Operates bookstores for college and university campuses.
Okay. Oh, for college university campuses.
Yeah, and K-12 institutions in the States.
I'm wondering if this. That's what I'm wondering if it includes their.
Be like an offshot. Yeah, it's just textbooks.
Like it's right at Lowe's.
Textbooks, right?
Yeah.
Yeah.
Yeah. NLSD.
What?
NLSD. Don't do that now.
Don't do that.
Shit, I know, I just want to see. Why? Why do you think I sabotage?
That's what we're.
It's of note, by the way, that this is the first time I actually saw the short bear mention this on Twitter. Love Lucas. That the VIX was actually getting volatile for the first time. You know, we haven't, the VIX, like normally we get panic on SPY, at least last year and the year before, and every year that I had traded prior to that, anytime we got like big panic on SPY, the VIXs would be going nuts. And for like in 2022, they were just kind of not, kind of crazy. So a little bit of speed up in the VIXs for now.
I have a question.
Yes.
I know that eventually
Uh-huh.
starts in pretty good market. But you win zone.
Mm-hmm.
Area pre-market, the two.
Yep.
You have a big spike.
Yep.
Would you consider an
Yeah, I mean,
so I'm talking about
yeah.
and then the market. So do you consider to end even not the one that you point
Here? Yeah, I mean, for me, we have this breakout, okay? That's the prevailing thing right here are this 210 to 220 area, where it's kind of broken out. That is the area when I am playing a breakout, because that's what this is. The setup here is a breakout, okay?
Yeah.
And it broke out yesterday. It did test that level this morning. That is the level. Now, that is the level that I consider on this setup. When I'm playing it, that is the level, okay? I am watching that level for a dip buy, yes. In the morning on a setup like this.
Right. I was thinking enter 5 minutes before the to twist.
Gotcha.
And
Yep.
because the can be volatile, if you and the reason then
I do. I do consider that an area of entry. That is the area of entry for me, for sure, on this pool. And for me, it was, we were talking about it this morning during the market, during regular hours here, during that pool all the way back to low a day.
Yeah.
It's still the entry there. That's what I was saying then. Like, if I'm going to enter a stock that spiked like that, I'd rather it pull all the way back to low a day and give me an entry near low a day, where I still get good risk and decent reward if it pushes back even to VWAP. You know what I mean? And then if you can couple that with a key level, then even better. For me right now, I am trying to not play breakouts. That's the only reason I didn't dip by this. It is the only reason, because everything else was okay. Catalyst, multi-day chart. It's not too extended technically. It's a little extended. It's gone from 50 to 250. But that's the idea. Is still I'd be buying weakness. I'd still have risk near low a day. It's a key level. That's all great. If I'm going to play a breakout, that's what I would do. I'd definitely wait, let it test, let it pull back. My goal right now is to be super disciplined and not buy strength and not buy breakouts. And if I buy breakouts, I'm buying weakness, but I'm trying to not buy breakouts. Because you can buy weakness like during a breakout, but a breakout by its nature is a setup of strength. You know what I'm trying to say? So I'm just trying to, it's an experiment for me. Can I not trade fucking breakouts for the rest of the month? You know what I mean? Can I do that? Yes, I can, I believe. How do you do it? You ignore them when they break out completely. So that's my MO. But if I'm all for breakouts for other people. I'm not saying don't trade them. I'm kind of saying you don't have to. Yeah.
There was a breakout, but
Yeah. Gotcha. So the scan is this scan right now, it's Friday, especially. Yeah, if I'm at home, my computer's shut down. Okay? It is shut down. Period. Golf, work, gym, spend time with my kids. It's the beauty of the job. It's the downside, which is there's not money to be made every day. Some days we lose money, obviously. So it's not a regular job, but it's also the beauty of it. You know, I can fuck off whenever I want. I teach all day, so I don't, have that luxury necessarily. But I love doing that, so it doesn't matter. And when markets get slow, I teach more. Generally, is what ends up happening because I'm trading less. What we do, at least in my group, is I do voice commentary every morning. Do live webinars, but voice commentary every morning. And I just kind of dump my thoughts out as I trade live. And then it's just great. If it's slower, we talk about other stuff. We work on other stuff. And I love personally using slower markets to progress my life, progress my trading. Just because markets are slow, that's usually a really good time to let's see what we did over the last couple months and really dive into it. Especially if it was especially because we had a hot market in December and January, okay, and part of February. So like if I got to this point in time and I didn't capitalize on any of that, I would look back and say why, and look what just happened and see and make sure that the next time things start to speed up again, I'm ready. That is the trading game, okay? The trading game is miss a bunch of shit because you suck. Chase a bunch of shit because you suck for a long time. At a certain point, you get less chasey, you start to get better, That's trading, man. And then one day you're pretty good at it, and then it gets to that other side where we're just trying to figure out the psychological aspect of what we need to do to make sure we're doing what we're supposed to do. But with experience, things change with experience as well. But that's my goal when I teach, and everything I do. I try to let people know how fallible I fucking am every day, how human I am when I'm trading. You see these traders making money or fake making money, you never know. And it seems easy and they seem like they just make money every day and they're machines and they've mastered the risk reward and their emotions and they're fucking robot traders and whatever else. Here, it's not the case. I'm sure there are some people who are more cold-blooded than me. I know there are. I have students who are more cold-blooded than me, even though I'm pretty fucking cold-blooded, But at the end of the day, I'm just very human, and I've just come up with so many ways to mitigate that. My human frailties, my emotional tendencies, Basic market concept stuff. The stock market works the way it does because of humans and our emotional side. They are rational. The markets know everything. The markets have processed every bit of past information to get to the price that they're at. That's what happens. But the markets don't know the future. And it's a bunch of people, and that is the emotional aspect that drive these charts that provide opportunities for us. Is the fact that, the companies can technically be worth nothing, but they trade much higher because of human emotion, for the most part, that market psychology stuff. So, okay. UNCY still the best play today. Kind of the only one we had any real eyes on.
Roland, would you consider buying this area?
Not really. You know, it just broke low a day, right? It just broke low of day. Still has two underneath. You know, somewhat dismantled. The markets are crap right now. Still. I also really like to go to the daily chart and not forget to do that. Okay, a lot of people will forget to do that, myself included, when I'm just trading day to day. But as we get like halfway through the day, or we get an hour into the day, an hour and a half into the day, go back to the daily chart. Don't forget. See what that daily candle looks like, right? Who? There we go. So UNCY, straight through pre-market high there, right? Which it's been messing with anyways. And again, I would be selling. I would be taking shares off. That's what I would personally do. This is exactly what I look for. If I'm not taking shares off into spikes, that and it's counterintuitive. Again, it is contrarian because it is breaking out and supposed to keep going up. It's breaking high a day. Everyone's buying it at 259, 260 right now. Shorts included. The shorts who are working off pre-market highs are covering. They all covered. And the problem is if it doesn't go higher after this. That's when it can get funky. And that's why I just take some shares off into this. You get a 40-cent push there, 35-cent push, squeeze, just a few shares, or all of it at times. It depends. But this is, it's not a perfect gap and crap reversal. It's actually not even a gap and crap reversal. It's a breakout that morning spiked and then pulled back all the way back to low a day and the breakout level, right? Higher low. And here's another perfect example. If I'm trying to play the higher low, I want to risk like 230, something like that. I'm getting in at 235. I've got 15 cents downside to low of day, and I've got 10 cents upside to high a day here. So if I'm buying 235, I don't like the risk reward there, Sweet move. But again, when it spikes like this, I don't care. I don't care at all. Because I should have been long here. If I wasn't long here, why the fuck am I going to be long up here when I'm supposed to be selling? And it's funny, there are times where I forget that. Not forget it, but the FOMO will take over, and I'm like buying a high day break, and almost inevitably it always goes back to low day. This may not be the case today. Maybe with this we get some squeeze. It's the only strong stock right now in the whole market, basically. Yeah, I saw 10x on the scanner. I talked about it earlier, though. This is a bottom bouncer, What, look at that. Is a fucking ugly chart there. Big gap up post split. Smacked because they're dilutive pieces of shit, I can guarantee. They always have been traditionally, which is why when someone said 10x, I just thought to myself, Okay. Let's check it out though. What? Go. Dilution tracker. 10x. Historically high. Shelf amount high. Outstanding shares right now. They got 16.7 million in warrants. 180. 225. 17 million at 225. 1260. 225, and it looks like 180 on a S1. Okay. 1 second, grab one more thing and we'll resume.
All right. Considering the world is looking. You're welcome.
Hey, no problem, Crazy Canuck. Hey, is that your best friend, eh? I love my Canadians, I'll let you know.
All of them?
Not all of them. Not Travis. Screw that guy.
Marty.
So UNCY original entry 221 risking 218, so 229 would not be another chance to get in, or would you say this FOMO I would be risking 224 level since it was high of day yesterday? The 229 would not be another chance. I mean, you know, this is honestly, this is just how I frame the risk reward. This is just how I frame it. You know, I'm not saying that it's the only way. You can find risk reward in other ways. This is how I look at it to keep myself safe over time. There are times where this is not how I'm trading, okay? There are times where I'm doing different things and buying high day breaks and stuff like that. But I make sure, damn sure, if I'm gonna be doing the dumbest shit that I know the noobs do, that it's working at the time. Does that make sense? If I'm gonna be doing that, that's key to me. So it's just how I frame it. Low a day, high a day, risk reward, what's the ratio? All right, is it 10 cents up, 10 cents down between my risk and reward? That's 1 to 1. Keep it really simple, right? But I can get, honestly, with gap and crap reversal, when it's working and popping off and markets are ripe for it and everything's good, I can get 2 to 5 cents risk and $1 to $2 upside at times or more. That's the magic of it, is I can get extreme amounts of risk reward off 3 cents, 5 cents risk, not just 1 to 3. Everyone's like, look for 1 to 3. I'm like, 1 to 3 is okay. I'm pretty much 1 to 5, 1 to 6, 1 to 7, 1 to 8 minimum when I'm trading, because I'm getting 5 cents risk and 30, 40, 50, 60 cents reward on a single. So imagine if it then spikes a dollar through high day and starts to squeeze, and I have 5 cents risk and now I'm up $2 a share or something like that. It happens. And generally speaking, like I said, I won't have all my shares up there, but I will have taken off into strength, taken off into strength, taken off into strength. In other words, by selling into this strength here, even on UNCY, like into the 260s, 270s, I can sit through more pool again. And then if I get another leg up, I'll probably sell into that. At some point, I'll end up being, you know, extra patient. It just depends. Second. Cool. You guys enjoying so far at home? Okay. Make sure I haven't missed any. Oh, I did. Mike JB3 asked, do you think there are markets that are better for shorts on gap and craps and markets that are better for longs on gap and crap reversals, or do you think they can both win in the same market by picking their spots correctly? What kind of market do you think we're in now? Because I feel shorts have been frustrated for weeks. Yes. Good shorts make money. Good longs can make money. Same ticker. I'm doing the opposite. The good shorts are doing the opposite of what I do. Period. Okay? Oftentimes, I make money, and shorts I see are making the same money on the same tickers. While all the other longs are losing, I still made money, and shorts are making money, and there's a fucking reason. You know what I mean? If you put yourself in harmony with it, of course there are markets that are better for short sellers. Okay? When we get into super chasers markets, they're dangerous for short sellers. Okay? That's the thing about short selling. It works so well a big majority of the time, and a lot of people switch to short selling that like 90% win rates and then blow the fuck up on one trade. That is the most common theme I've seen with people getting into short selling. And you never know when that moment comes. I've heard the most horrific stories from short sellers. You don't necessarily hear them on Twitter because no one likes to talk about it on Twitter. But I've heard just from being in the industry and having friends at brokerages and stuff like that, horror stories, you know, of really good traders, man, who have been trading forever profitably, you know, with multi-millions in their account, gone, all of it, you know, overnight, one day, 2 hours, gone. So it's a great tool. Understand how they work. They provide the squeezes, you know? Okay. The kind of market we're in now is the kind of market where the top percent gainer today is 25%. That's what today's market is. That's all that matters to me. Not what happened yesterday or the day before, but today. Today's telling me we don't have volatility. We don't have range. I've got nothing I really need to trade today. And because of this, by the way, when we get back to the market on Monday, there's not much that I need to trade unless things change. Okay, if I get back to my scan on Monday and it's identical to this morning's scan, which is no 50, 60, 70% gainers, nothing gapping big at all, you know? And if you think about that, how many stocks there are and the fact that there's no stock that's up more than 25% right now, at least with my parameters. I'm sure if I open it up, it's the same damn thing, because at the end of the day, small cap are always the biggest percent gainers. Let's take the cap. I think the cap's off. Is it? I'll put the cap off. There you go. So the MO for me on Monday is like, I'm going to go into Monday not expecting shit. Does that make sense? I'm going into Monday expecting 20% gainers. If something changes, I change. At this point, that's what I do. I pull back from my trading, kind of shell up, singles mode only, lows only. You know, take it off into highs, quick spikes, scalpy-like trading, tiny losses, small gains. That's the game to me at this moment until things change. The scan will tell me. Maybe I'll nail it. Maybe I missed the first big runner, but then I'll hit the next runner and the next runner until they stop again, you know, and keep adapting, keep pressing the gas pedal, then taking off, sometimes slamming the brakes, always evolving, always adapting, you know? Any other tickers? And again, no good longs, no good fucking shorts for the most part. You know? Stocks aren't spiking. It dries up for the short sellers too. We need each other. They need us to pump their stocks up. We need them to get squeezed so that, you know, they can buy. I use them every single morning to cut where they're covering, hopefully, to hit a gap and crap reversal in the mornings. You know? That's the game. And if you can get in harmony with that and get in harmony with the markets and the harmony with the players that are involved, you're going to be ahead of the curve. You're going to be ahead of, you know, so many people who just come in, they want picks, they want to be spoon-fed bullshit that doesn't work for them. You can't spoon-feed trading to somebody. Everyone has to walk through the fire every fucking day, you know, to get to the other side. And then, you know, your trading will start to struggle again. You got to get back through the fire again. It just is what it is. It's a grind, man. And the best traders grind the hardest, work the hardest. But then the intangible stuff we're talking about, they're always, all of my best trader friends and the best students that I have are just constantly striving to be better, to perform better, to execute better, to understand better, to understand the markets, you know, to understand their psychology, tracking their trades, journaling, reading, coming to boot camps like this. Those are the people that I have seen make it. The other ones who like whine and bitch and want picks and complain about the market makers and they should just be short selling and all the things that every other trader says all the time, those people don't amount to anything and they end up just doing something else, which is fine too. Not everyone can trade. I don't believe everyone can trade. I've never thought that. You know, some of us aren't cut out for it. That being said, I don't think there's any requirement. There's no like IQ level. I've seen all IQ levels, you know, backgrounds, ages, genders. It doesn't matter. It doesn't matter. It's just like, are you going to maximize your workload and do as much as you can to get good at it? Most people won't do that. Most people can't get past like the work aspect of it. It's going to take work, a lot of learning. It's not overnight success. It's not make a shit ton of money right away. In fact, most of the time it's the opposite. It takes years. You're going to lose a lot of money anyways. You know? You got to learn the lessons the hard way. You got to go through the fire. So there's no spoon feeding. There's no replacement for experience and screen time if you're just starting. The longer you're watching, you know, the longer you trade, the more things will become apparent. The slower the price action becomes. Just like anything, you know, when I started watching charts in the beginning, fuck man, so fast they'd move and you're just trying to catch shit, you know, you're literally trying to catch stuff. And it's like, I put myself right back in that mode. It's not, it's fun as fuck. Don't get me wrong. It was way more fun. Trading was way more fun to me earlier on when I was like, get to the market and ready to YOLO and like just go. Okay. That was way more fun and way less fucking profitable. You know? I gotta make a call quickly. I gotta make sure that we can stay here beyond late checkout or whatever. Let me check that out. Everyone hang tight for 1 second. I'm just gonna see what time we have to be out of this Airbnb or whatever. New high on NCY coming potentially. If we can stay here, we may just stay here, but we may be heading to a WeWork up the street later today. I'll let you guys know if that happens. If that happens, we'll be pausing the stream for probably like 30 minutes and then resuming in kind of a classroom setting later today. I think we should just do that anyways. Just go to the WeWork later. I have the WeWork booked, so they have everything there too. So that's what's gonna happen. I'm gonna call this guy really quick, but we'll probably have only another 40 minutes or so, and then we'll be pausing the stream, heading over to a new location, and then resuming for the rest of the Friday afternoon. Any questions for now while we're here? What's that? Yeah. We'll do that from WeWork. Yeah. Yeah, we're gonna do that from WeWork.
Oh, and we were.
Yeah, you guys will find that excitement, fun, like adrenaline does not help the trading. It's natural, of course. It's natural. But okay. Sorry, y'all. Okay. Okay, so you need to kind of know where I stand. I don't know what DTC is. Solo brands, business model with a long runway ahead, blah, blah, blah. 10K, earnings, beat. Yeah, we'll talk about dilution now quickly, actually. But first I just want to check this chart out, see what's going on here. So again, DTC is another example of something hit my scan. It's only up 25%, but I can't trade that. I cannot find risk reward that makes sense. So I just ignore it. Okay. Over time, it gets easier to ignore stuff. It does, I promise. When you realize there's no trade for you, even if it goes to $100 right now, there was no entry. That to me is so important when you can settle into that idea that where was the entry in retrospect? Of course, you can find something, but I didn't have eyes on it anyway, so it doesn't matter. Let me see, 1 second, guys. Grab. Okay. Oh, they got a new section here. Nice. I wonder if that's why they raised the price. Okay. Just with splits. I don't know how long that's been there. All right, hey, really quick, guys. We're gonna talk dilution really quick before we pack up at this house and head to the WeWork. Really, really important concept. Hey, Mikey, keep it down a little bit, brother. Most of you know what dilution is at this point, I'd imagine. If you don't, basically these companies need to raise cash. They have no means of raising cash other than going to an institutional investor, selling them a shit ton of shares at a discount, new shares, okay? Say the float's like 5 million shares, okay? There are 5 million tradable shares. You know, they may sell another 5 mil, double the float, okay, at a discount. That's the thing. Stock trading at 5, they'll give it to an institutional investor at 250, like 5 million shares to dump, okay? Along with that, they'll generally give them warrants that are kind of like options. You know, they expire at a certain date, but they're exercisable at a certain price. Generally speaking, when this happens, these stocks gap down, which is why, because it's not a good thing. We are being diluted. Your piece of the pie is smaller, okay? You know, just take a pie. Say there's 4 pieces, right? You get one of those pieces. You get a quarter of that pie. That's a lot of the pie. That's sweet. And then someone's like, nah, they come in there and they cut it in, you know, half basically, or 3 quarters, or they cut it into fourths, okay? And they take those 3, you have 1/4. All right, you have a smaller portion of the company. That's basically what's happening. Think about, like, you know, Coke. When you pour a bunch of water in it, they're diluting it. They're being diluted. It's not as good. The stock's not going to move as fast. The float gets bigger. But more importantly, the price goes down because retail investors are like, first of all, it's known it's not a good thing. They just sold it at 250 to these people that can now dump at 252 usually. Whatever the metrics are in that offering. That's the thing. Excess supply. They are going to have millions of shares. Some institutional investor is going to have millions of shares that they need to offload. How are they going to offload that? They need volume. You have millions of shares to dump, you need volume. You need retail volume. They need us. PR comes out, stock goes up, everyone's fucking buying it. Everyone's buying it through high a day and the breakout and this and that. Meanwhile, unbeknownst to everyone, there is someone with millions of shares who is ready to sell into those high day breaks or into the morning gap up even. You know, just they're going to sell it into the gap up. There's a ton of volume at the open. So they'll dump shares there. They'll dump it in a high day. That's the idea, okay? Excess supply. And the beauty of it is that they'll tell you where. All right? They're no different than pretty much like Atlas, okay? Or any of the big pump rooms, or anyone who pumps for that matter. It's just the companies themselves, and it's illegal because they tell you they tell you what they have and where they're dumping it, okay? They tell you where the prices are, how many shares. All of that stuff is public information. They're just counting on the fact that we don't fucking read anything, you know? And we're just chasing it because they put out PR about phase 2 news and we're thinking that they're going to the moon, you know? And then the chat rooms get it. That is what these companies rely on. And then they have millions of shares to dump. At least these Atlas cats, you know, couldn't afford that much. These guys, the companies themselves, the institutional investors, we're talking about 20-cent stocks, 30-cent stocks, hundreds of millions of shares at times that they have to offload. That's why they don't go up and only go down. And that's why they end up doing a reverse split. They have to maintain compliance. They have to hold $1, right? If they don't, they have to split. The reason they can't get over $1, well, number one, their float is way bigger now. It's 100 million shares, 150 million shares, 80 million shares when it was possibly 5 or less, you know, months prior to that. But they just dump and dump and dump. The cheaper it gets, the more shares they dump. A lot of these dealings are toxic, okay? Where the conversion prices are based on a mathematical formula that is still meant for them to get the best price and fuck retail. It's all revolving around that, protecting institutional investors and the people who put the big money into these companies. And then at the same time, they are basically like payday loans, you know, for these companies, just to bridge the cash needs of these companies. And they sweeten the deal with warrants, you know, so they do 5 million shares, but then another 5 million exercisable at a given price. When the price gets to that level, they can dump more shares. They can exercise the warrants, dump more shares. Okay? Super important to understand one of the prevailing themes of small cap. One of the prevailing themes of small cap here, and I keep track of it, okay? Again, in 2021, this process went away because people didn't care. Everyone's YOLO buying dips after offerings. 2022, it changed. It does affect the stocks. It's really important. These cheap stocks are cheap for a reason. And then they get big floats. They can't move back over a buck because of the big float, combined with the fact they are still dumping, okay? They dump and dump and dump. That's what they do. And then they do a reverse split. And then they do a reverse split to maintain compliance, and the cycle starts all fucking over again. Now they're a $3 stock, a $5 stock with a 1 million to 10 million share float again. And they start the process again, you know? And that's what's amazing, is it's predictable. And once you understand that that's what's happening, you can avoid it. You don't have to be there when you know that there are warrants exercisable at a certain level and it crosses that level. You don't have to be long there, you know? That will set you apart. Understanding that will set you apart. 99% of traders still don't look at it. Long traders. I think a lot of short sellers probably look at it more. It's a bigger part of the process for short sellers. I think it's one of the most important things for long. So what do? Before I used to have to go to the filings. Okay, I would go look for the forms, the 424 forms, the registration forms, your S1s, your 10Qs, you know, earnings. I would go into earnings and look at stuff. Nowadays, I use dilutiontracker.com. Okay, I'll put a link here. I'll put a link here. Hold on. That's who I use, Dilution Tracker, okay? Why? It saves me time. It looks like they put new splits up here too. So we can track splits here as well. Cool. That being said, I'll just throw the ticker in here. We'll take DTC for example. This shows as clean, okay? This bar chart will show if there's any dilution. It'll show the shares outstanding and the dilution will show above it. And it'll kind of give you a rough idea at these prices how much they have to dilute. So there's an example of something fairly clean, or very clean, at least from what I can tell. See here. UNCY we'll throw in. Looks like they have a crap ton of convertible preferred shares to dilute. Warrants. July 2021 IPO warrants at 6. Okay. On DTC, which we're kind of creeping up to, it looks like. July 2021 though. Okay. Convertible preferred. A crap ton of them, 55-cent conversion price. Fat ATM, but limited by baby shelf. Not too fat, 3 mil, but still. Yeah, I mean, they're dilutive. Yep. Which one? So they've got these convertible preferred, but they are not registered yet. You can see here. Instrument must be registered with the SEC through a registration statement prior to being used, except there's certain exemptions. There are some exemptions on like some S1s and stuff like that, I believe. Not registered. Yeah, so those aren't ready to dump. It's pretty clean. Looks like a 3 mil ATM that was terminated, and a couple of convertible. One requires conversion requires approval, and they're not registered yet. So for now, clean. Okay, it doesn't look clean with this, but those are not active yet. All right, when they do become active, not bueno. All right, so I wouldn't really want to be around for that. Okay. And IPO warrants at 6, which we are right, or is that UNCY, I mean? Yeah, UNCY, which we're far away from, okay? So when I see warrants with an exercise price, I love to see them because it gives me clear knowledge, okay, of a price level, how many shares, how they're able to dump them and stuff like that. Stock trading at 2, warrants at 6, the warrants don't come into play in my mind. You know what I mean? That supply's not there yet, in other words. Unless I go back in the chart a couple days and they were over 6 maybe like last week and the offering had been prior to that, then I think to myself, okay, they could have triggered that they could have triggered exercise of their warrants and now they can dump them all right? So it's case by case. Again, just like VWAP, just like trend lines, just like anything that I do, it's just one piece of the puzzle. There were times where there were warrants at 6 and the stock's trading at 7 and I'm trading it, okay? So it's not the be all end all. I don't say I don't trade if there's an ATM. I trade, almost everything has some sort of ATM, honestly, that we trade. So I'm not saying that I'm not trading them. ATM, by the way, for those who don't know, is an at the market offering. They can dump it at any price, right? ATMs, warrants, convertible shares, these are the main things that I am looking for. Who is dumping them? Who's running them? How many shares do they have? What price can they dump at? Will it affect the stock that I'm trading? Will there be excess supply? That's all I care about. That's what this is. It's not about finding a valuation. It's about finding excess supply. Right? So that was just a quick rundown, okay? That's all you need to know is that these guys, they're big institutions, H.C. Wainwright and Maxim. See these names pop up over and over again. Piper Jaffray, I think, was one. You'll see these names pop up over and over again. They have millions of shares to offload onto you. The PR is designed to get you to buy. They dump on you. They dump on you, okay? And I believe they have algorithms that some of these bigger, some of these bigger institutional investment firms run algorithms to do this. So, and that's why you'll see it kind of go through low a day and hold, and then bounce back to high a day because they want to just keep churning volume. It behooves them if they want to get rid of millions and millions and millions of shares to keep churning volume, keep churning, and instead of just destroying the stock. They need buyers coming in. They need shorts being squeezed. They need that dynamic. I think that's why oftentimes why it can get really trappy, especially on a lot of these dilutive stocks where shorts, first of all, pile in because they know that it's dilutive, so they're going to have naturally a lot of short sellers. But then I think they run them, and then fuck the retail longs at the top and then fuck the shorts at the bottom to keep volume churning, If not, it just spikes and then dies, and that's just my opinion. With an ATM, does Marquis ask, does the company have to announce the selling of shares like an offering? Or they can just be selling behind the scenes on the download? Yeah, no, it'll be public information that there's an ATM, but they're not going to every day be like, hey, we sold 500,000 shares today, just to let you guys know. They don't have to do that. You may not find out till the next quarterly report how many shares that they've been dumping for that last quarter, okay? I've seen at times them do that, but very rare, where they're like actively telling you what they're doing. I think it was Dries was the last one I saw, where the Dries was like, we dumped this many shares. And they're like letting you know how many shares because they had so many shares to dump. That it became bullish once like they were getting low. Remember that? They'd like get low on shares to dump and it would spike. It's so funny. Yes. What is this? Look at that. Look at EUDA. EUDA. They halted up a bit ago. I don't see any news at all. Interesting. Again, it's spiking. I ignore it. That's how it works for me. I don't sit here and try to find an entry for any reason. In a different market, if I had a reason to be at this, maybe I'm looking for an entry. Not this market. This market means protect myself. This market means don't chase. Sure. And when stocks run randomly, they run randomly. Look at this. At what time? 11:20. A little bit of volume came in at 11:20. Probably a chat pump. When I see a ticker with no volume that just randomly midday spikes, usually a chat pump. Maybe some kind of news came out, hit Twitter or hit stock twits, and then chat rooms bought it up. You know, that makes me uncomfortable. I'm not chasing. Okay. That's it. Really it for the trading this morning for me. We will be doing power hour too. Keep an eye on overall markets. Nice push. Went green. Morning. Trying to bounce now finally. Off to BBAI as well. AI. Oh, nice. Okay, Thinkorswim keeps the account up to date. How often though? Daily? I know equity feed. I just dated myself. I know scans. Has gotten better about the share counts I've been watching over time, but still not 100%. Someone interested in AI still off like $20. But it's going to be based on overall markets, whether that can do anything. We're going to go 15 more minutes and then we're breaking. We're going to go 15 minutes and we're breaking. Just to let you guys know, the stream will be paused. We'll be back approximately 45 minutes to an hour after that break. Meanwhile, the only issue is that because we have to go. Unless I just like, what am I here? I don't know. Oh, that's all right. We'll get it sorted. All right. So we're just gonna do general Q&A for the next 15 minutes till we wrap up. My guys here, same thing. If you guys have any questions right now.
I have a good price. No, you don't trade momentum.
Yep.
But when you do the slow day, it hits like slow day, but immediately.
Yeah.
Like a trappy action,
Uh-huh.
like a short. Does that add to your conviction or low day pro? Not gonna anymore.
It depends on the nature of it. All right. If I'm watching a low a day and it snaps and holds immediately, usually it'll be like a wick for me on a minute candle, you know, like that, and then quick reclaim of low of day. Most of the time it adds to my conviction. It will add to it because now I'm like, not only are the shorts who are short the gap, okay, and profitable, they see that too. They're watching low a day, and they're watching the next leg down. They're watching consolidation for another leg down. And when they're like, and it's that dopamine, you know, that you get when a trade does what you think it's gonna do. You get dopamine, you know, when you get a spike and you buy it and it spikes, it's like, yes, it worked. Like, this is working. But it's the same thing when people buy through high day and it wicks. You're like, you get a quick shot of dopamine and then quick fear, like panic fear, because you're like, oh no, like that was wrong, you know, immediately. That's the idea. If I have short sellers who are shorting through low a day, there are short sellers who are shorting through low a day just like there are longs buying through high day. You know, those people, that's the key, is that they're immediately down. You're shorting that low a day and it holds immediately, or if you're already short from highs and it holds immediately, that might be the bottom. And that's all I'm really looking for in the morning, is this might be all I'm looking for is not what I think the bottom is necessarily, but that it might be the bottom if I were short. Does that make sense? Like, this might be the bottom. That's the first time the seeds of doubt are planted in the mind of a short seller, is that this might be the bottom. That's when I'm interested in. This might be the bottom. There are times where that's my position, right? There are times where I see the bottom, okay? And of course it could go lower later, but in the moment, there are times where I do see a clear bottom, okay? And that's generally speaking where my best trades are gonna be. But if it's not a big deal. You know, if I have to cut, I have to cut, and I can put it back on, and oftentimes I'll do that. I love when that happens. I love when I get stopped out because I was supposed to do it. Immediate reperk, I'll double my size sometimes. Original risk and sometimes better entry even, because I see it immediately and I'm able to snag an entry maybe at my previous risk even, you know what I mean? And even have a penny risk, because if I see a bear trap, but then we get back, then we start to crack more again, it's not a bear trap. You know what I mean? Mm-hmm. So that's what I'm watching. Is it a bear trap? Generally speaking, if it is a bear trap, there will be a quick move to the upside. Generally speaking, when I see that, especially if it's gapped, you know, significantly, and there's a lot of downside, at least on the chart, you know, shorts see a lot of downside, and then it does that, that's when it can be really powerful, you know.
If it's closer to your like daily or intraday board level.
Yep. Whatever it may be, anything that you can add to that formula, you know. Dilution tracker, guys, will save you time, and I promise you, over time will save you money. I think they raise their prices. I threw a link in there already for you guys. Okay. I got a couple DMs after I announced the stream of people wondering about boot camps again. The next one is Nashville. Be a bit bigger than this one, but it'll be a really solid group in Nashville. What is today? April's Nashville. May is going to be Las Vegas. Mid-May will be Vegas. And then June is going to be California. June I'll be hitting LA, San Francisco. I'm skipping out on SD this year. If you're in SD, I'm close enough to LA, so that's going to be the schedule. That will kind of take us through the first half of the year. Just hang tight. If you put your email or you're signed up to the site, you'll get notified when they come out and be able to kind of get in first. Because the boot camps I'm doing this year, last year I ran bigger ones. This year I'm trying to keep them small, like 20 people or less for the most part. It's just a more manageable group. I'm able to work with everyone on a more personal level. And yeah. Where else should I go? I think I'm gonna hit New York City. I'm gonna try to hit Canada. Midwest, we're gonna try to hit. Florida, we're doing Orlando and Miami. That'll be second half of the year though. So there'll be 2 in Florida. What's that? No, only dates for Nashville, which is on the site. And then the tentative date for the tentative date for Vegas, I believe, is 11th to 12th, Thursday, Friday. And then I have a bachelor party that 13th. And if anyone wants to hang around, come to my brother's bachelor party with me. The more the merrier. You're like, who the hell are all these guys at my bachelor party?
What are they talking about stocks?
The pack, baby. I know I really, really want to come to England, to London, and watch my Arsenal this year as we take the title. That's what I want to do. There's a very, 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 very small chance I might make it to London pretty soon. Very small chance. You know, well, we got a couple months left in the season, 2 months or so.
2.5.
I'll run a boot camp in England. What'd you just say?
You don't want to repeat that. You don't want to repeat that.
Someone just saying Man City over here. You don't like beans on toast? Beans on toast? When I was 17, I went to England, and I was living there for a while with, they called them the digs. It's like where foreigners would pretty much all live together in this house. Yeah, we ate a lot of beans on toast, dude. That's like what they ate for lunch at the facility. They'd like play soccer and eat beans on toast. I'm like, I don't know what this place is. I kind of grew to be fond of it. I liked it. And like second supper, you have like dinner, but then you'd have like tea and toast later before bed. It was nice. But yeah, London would be great.
Arsenal.
April 26th, Arsenal, Man City.
Yes.
All right, boot camp in London, April 24th to the 25th. I'll be in London. I just have to tell my wife. That's a.
He's right here.
I'll tell her like the week before. See. Yeah, exactly.
Love Vine. Like,
Okay. Any questions? Let's keep them going because we're gonna wrap up in like 5 minutes. If there are no questions, we'll actually wrap up soon. I'm actually gonna put on while we're moving. I'm gonna throw on another quick video from NYC Bootcamp or whatever. What's that? Yeah, we can do that. I'll probably just stream it for now because it's only a 30-minute video. We got to get ready and get out of here anyways. But for now, a few more questions. Final match round is the 28th. Maybe the 28th, you know? Go watch them lift the trophy. Are they at Emirates? I'm not sure if they're at Emirates on the last day. I do like fish and chips. Does RLX have a good entry this morning? Not now. What about RLX? Big Bertha float. Earnings. Oh, this morning. Gotcha. I mean, it's not really, you know, for me, just kind of straight spike, pull back to low a day, you know. So, I mean, technically, yes, similar type of entry to UNCY even, you know, morning spike. The entry for me on morning spike at this point in my career is pull back to low a day, towards low a day, risk low a day still, you know. Still get new shorts. They're still supposed to cover at least towards low a day. A lot of them teach that, you know. I don't know if this would be heavily shorter this something like that. No play for me. There's nothing definitive on the daily or nice push, could keep going, just not for me. Do you guys want me to read you? I will read books to you guys today. Yes, I will. Maybe tonight. How about tonight? How about like bedtime tonight? How about I read a chapter to you guys every night at bedtime? Yep, bring my kids around so they can learn about stocks too. Be like, Teddy's reading a different kind of story tonight. All right, kids, gather around. Reminiscence of a stock operator.
Oh, and the quick plunger.
JB3 said, I always hear about how death candles, quote unquote, used to trap longs and then just dump, great for shorts, but now we hear a lot about how they can end up being short traps. Death candle, hold and reclaim. What do you make of this change? Do you think it can change back? It can always change back. It always is changing, right? Death candle is only a death candle. Here's the thing. If everyone sees a death candle and shorts it, like I said, when everyone shorts it, it goes up. I think that's really what it comes down to. Algos, sophisticated traders know this, you know, and the computers, they know this. That's why it works how it works. That's why things get really trappy now. But if you understand that dynamic, that trappy dynamic, it makes even more sense to be buying lows. And that's why when it spikes and comes back to lows in the morning, oftentimes you can still get a decent trade out of that, whether it be to VWAP or back to high a day. Is that exact thing that's happening. Shorts understand when stocks are range bound. When they're range bound, they're range bound. They go from high day to low day to high day to low day. Somewhere in between consolidate until they break lows or highs. And most of the time, that high and low is set in the first 30 minutes of the day. Most of the time, okay? And if you see highs breaking, it depends on the markets, but in markets like this, if you see highs breaking like midday, you gotta be careful. Probably good sell, you know? Or going back to low a day. And when you get greedy and it goes back to low a day, that's when things get all jacked up. But if you're not selling into high day, it goes back to low a day, you failed. Now you're holding and hoping maybe it goes back to high day, maybe it does this. Maybe you're gonna sit range bound all fucking day and be wasting your time. That's the one thing that I really don't like to do, okay? Is look for a morning trade, end up in an all day hold of something that's consolidating, and then it breaks down end of the day. You know what I mean? There's nothing more frustrating to me than that. Because I didn't lock. That's 99% of the time I didn't lock, okay? And I'm sitting around. And a lot of the time, because of how I play, since I'm playing lows, my wrist doesn't get broken all fucking day. You know what I mean? So I sit around and I don't like that either. But it's also the beauty of what I do and why I like to trade the way I trade is that when I'm buying in the morning on gappers and they go at all, there's a damn good chance I'm not going to be stopped out. You know, and if it is, it won't even be till the end of the day. So I like those entries. When I rewind to earlier trading, half the time I buy it, it just gets smacked, you know, hard, quickly. And I would just cut because I didn't know what I was doing. I was chasing strength, and naturally chasing strength, they pull back. Stocks don't go straight up. You know, and the faster that spike is that you're trying to get into, the faster it is going to pull when it pulls. As a general rule of thumb. I do love you guys, I do. Yeah. You know what? I'm probably going to read portions of that book for you guys later when we go to, I'm not going to read the whole first chapter. but I highlighted some stuff, and I will read the highlighted portions, which will take me probably 3 minutes. Hey there. Okay, sweet. All right, y'all. We're pausing the stream. We'll catch you guys in about 45 minutes. If for some reason the link is not working to get back onto the stream, just go to my YouTube and I will be live on YouTube. All right. But we're still going to be using the Discord chat. Anyways, thank you guys. We'll catch you soon. We'll catch you in the chat soon. We'll catch you live streaming. Again, if you can't access the site, just head to my YouTube. I'll be live on my YouTube. All right. Catch y'all in a bit.